Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now, Bitcoin is still repeating history in the short term as the new inflation numbers were just released over the last one day, causing interest rate cuts likely coming very soon, while Ethereum is also still repeating history here in the short term. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, just before we take a look at the Bitcoin charts today, we need to talk about some news today because over the last one day, we just saw new inflation numbers get released and the CPI inflation rate in the US just came in at 2.9% year over year inflation. And just yesterday, the expectation for this result right here was 2.9%, but just before the result actually came out over the last one day, that expectation actually changed to 3%. So either way, this result basically came in right at around expectations, technically slightly below that new expectation of 3%. But either way, the result was extremely close to expectations. It was pretty much what people were expecting anyway. And so as soon as this got released, we didn't really see any major moves in the market. But what we did see over the last one day is essentially with this inflation results right here, we've basically locked in a rate cut, which is coming next month. So in case you're new to all of this, that means the Federal Reserve reducing interest rates. Because as of right now, the Fed funds rate on the high end is at 550 basis points or 5.5% essentially on the high end. And as of right now, the probabilities for the next Fed meeting, which by the way happened just next month on the 18th of September, right now the probabilities for that Fed meeting on the 18th of September, we're sitting at around a 64% chance of an interest rate cut of 0.25% or 25 basis points and a 36% chance of an interest rate cut of half a percentage point, so 50 basis points. And so at least for now, there's currently a 100% probability based on these futures markets right here. There's a 100% probability that there will be an interest rate cut next month. So the next Fed meeting, once again, on the 18th of September. And so right now, the debate is not if there's going to be a rate cut, it is if there's going to be a 25 basis point cut or a 50 basis point rate cut at that next Fed meeting just next month. And in case you're new to all of this, all you really need to know about interest rates when it comes to markets is the lower the interest rate, the more stimulative that is for the economy and for markets. So the more bullish that is, the lower interest rates are. And the higher interest rates are, the more restrictive that is for the economy. So the more bearish that is for markets. And there's still a lot of people that get confused about that because they forget that correlation does not equal causation. So if you look back throughout financial markets history, for example, back in the 2008 crash, for example, yes, we saw interest rate cuts, and a lot of other times we've had interest rate cuts near market crashes. But it's important to understand it's not the interest rate cuts that are causing market crashes. For example, in the 2008 global financial crisis, reducing interest rates and starting quantitative easing, also known as money printing, did not make the crisis worse, at least not back then. Technically, it created other problems later on. But if the Fed did not cut interest rates and start QE back in the global financial crisis, many more banks would have collapsed and that crisis would have been a lot more severe. And so it was not cutting interest rates that caused that crisis, and it was not cutting interest rates that caused the market crash back in 2008 or many other crises or crashes that have happened around interest rate cuts. It's not been the interest rate cuts that have caused those crashes, it's been other factors. And in fact, like I just said, it's very likely that a lot of those other market crashes throughout history, like the dot-com bubble and things like that, would have been a lot worse if the Fed did not step in and do anything with interest rates. And so reducing interest rates is always a bullish force for markets. It's just sometimes when that is happening, there's other bearish forces that are also happening that sometimes overwhelm the bullish force of reducing interest rates. And so once again, cutting interest rates or reducing interest rates, that's always a bullish force for markets, just like how, for example, throwing water on a fire is always going to at least help put the fire out. But sometimes if the fire is too large, you're going to need a lot of water. So if you're only putting a little bit of water on the fire, it's not going to put the fire out completely. And so in that analogy, the fire would be some sort of other bearish factor like a financial crisis, for example, and the water would be reducing interest rates, trying to put out the fire. So that's always good, but once again, it might not always be enough, like what we saw in the 2008 crash. And so that's the situation right now in the macro environment with inflation and interest rates coming very soon, interest rate cuts that is. And if we're taking a look at the Bitcoin charts today on the 4-day time frame, technically speaking, at least for now, we're within more of a bearish trend, forming lower highs and lower lows with this bearish signal right here in the super trend indicator on the 4-day Bitcoin chart. And if we're looking at the 2-day Bitcoin chart, we're still forming this descending broadening wedge pattern, which if we actually confirm a breakout above that resistance level right there, which is sitting at around 68,500, if we see that happen, then that would set up a bullish price target. But obviously, as of right now, we have not seen a confirmed breakout above that resistance. So at least for now, we're still within more of this bearish trend. But as I always say, even during a bearish trend, we can see the occasional pump to the upside here and there during a bearish trend. And if we're taking a look at this daily Bitcoin chart right here, as of right now, we've seen yet another rejection from this area of resistance sitting in between around 60 to 61,000 approximately. And we have more resistance at around 63,000, more resistance in between around 67 to 68.3K, and more resistance in between 72 to 74,000. And as for short-term support, we do have a little bit of support at around 57,500, and below that we have more support in between around 56 to 57,000, and a significant area of support in between around 51 to 53K. And so those are just some areas of support and resistance to pay attention to on the Bitcoin price chart, at least for now. And if we're zooming into the short term, looking at the current day price action compared to what we saw back here, back in March 2020, once again, we're still seeing very similar price action right now, because in both of these situations, we saw a major crash to the downside and then an initial reaction to the upside, and then a little bit of a pullback, forming a slightly higher low in the price chart, and then more of a bullish relief coming next, and then that first initial high, and then a little bit more of a pullback over the next couple of days. And then we saw a bit more of a bounce again in the price of Bitcoin over the next few days, all the way up towards close to that previous high right there, which is what we just saw. And then what came next, back in the March 2020 situation here, we saw a little bit more of a pullback back down close to this previous low, but not below this previous low. So right now we've also potentially just seen that move play out. And so if we continue to repeat history here in the short term, then what could be coming next? If we're taking a look at what came next back then, we saw a little bit of a bounce followed by a tiny pullback here, and then a little bit more of a bounce. So basically choppy sideways price action, but slightly moving towards the bullish direction. And so just in the short term, this is what I'm now expecting for the price of Bitcoin over the next 1 or 2 days. We're most likely going to see a very slight bullish relief, something like that. But of course, it's not going to be a straight line like that. It's going to be made up of some choppy action here in the price action here. Basically, something like that, for example, is what is most likely going to happen over the next 1 or 2 days. And once again, this is mainly based on the fact that Bitcoin is still seeing very similar price action right now to what we saw back here near the bottom of the March 2020 crash. And if you want to actually trade these moves in the price of Bitcoin or any other crypto, personally, I take just about all of my trades over on Bybit. So I'll make sure to leave a link to Bybit down below this video in the description and in the pinned comment. And if you use that link down below this video to make a Bybit account and deposit on that account, then you can get up to a $30,000 deposit bonus, but only if you use that link down below this video. And also, if you use that link, it'll take you to this page right here, which is a massive lucky draw happening right now over on Bybit, where you could potentially win up to $100,000 or some free Bitcoin or Ethereum or USDT just by trading crypto using the link down below this video. And so if you're going to be trading crypto anyway, you might as well check this out. Once again, first link down below this video. But for whatever reason, if you cannot access Bybit or if you cannot KYC on Bybit, there is also Bitflex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitflex. And so I'll also make sure to leave a link to Bitflex down below this video as an alternative crypto exchange. And with that being said, if we're taking a quick look at the Bitcoin liquidation heat map, over the last one day, we saw a very slight move to the upside, very, very close to that level of liquidity, sitting at around 62,000, give or take, but we did not quite hit that liquidity right there. We did not actually hit the liquidity. We saw a little bit of a pullback here in the short term just before hitting that liquidity. And so that now means that there's still liquidity sitting right at around 62,000, basically in between around 61.8k to 62.2k. So right at around 62,000, give or take, there's a lot of liquidity right there just in the short term. And so that is the main level of liquidity that I'm paying attention to right now, at least that's above the current price. And we do have a little bit of liquidity to the downside, first of all, at around 57,500, and some more liquidity at around 56,500. And so those are just some other areas on the price chart right here to pay attention to as areas of interest. But with that being said, once again, the majority of the liquidity here in the short term is sitting right at around 62,000, give or take. But with that being said, taking a look at Ethereum on the weekly time frame, right now we're still seeing that major bounce from this critical area of support in between around 2,000 to 2150. And here on the 3-day time frame, we're also bouncing from this golden pocket sitting in between around 2150 to 2.2k approximately. And we also have this 50% retracement level acting as support at roughly around 2,500. And over the last few days, we've actually seen a bounce all the way back up towards this critical level on the price chart, which is sitting at around 2.8k, which I've been warning about recently here on the channel. 2.8k should be acting as strong resistance. That is a significant level to pay attention to. And so if we can actually see a confirmed breakout back above 2.8k with candle closes back above 2.8k, then in that case, we could likely see a move up towards around 3.2k. But once again, only if we confirm a breakout above 2.8k, which at least for now has not happened. So still expect resistance around this level just in the short term. And as for the trend and momentum right now, technically speaking here on the 3-day time frame, we're still in more of a bearish trend. Even if we see a little bit more of a bullish relief in the short term, technically speaking, at least for now, we're still forming lower highs and lower lows, which is what a bearish trend is. And if we're zooming into the short term, looking at the 4-hour time frame, we're still seeing pretty similar price action, not 100% exact, but similar price action right now to what we saw back here, back at the bottom of the March 2020 crash on the same 4-hour time frame. Because once again, in both of these situations, we saw a crash to the downside and then an initial low right here, an initial reaction back to the upside, and then a slight little pullback forming a higher low, and then a bit more of a bullish relief over the next couple of days, followed by a slight little pullback again and some choppy sideways price action, which is what we've seen over the last few days for the most part. And if we're looking at what should be coming next for the price of ETH here in the short term, based on what we've seen back here, we're likely going to see a slight little pullback, nothing too major, but a slight little pullback, kind of like what we've seen over the last one day just here. And then that will likely be followed by a little bit more choppy sideways price action. So something like this, for example, is a likely scenario just in the short term over the next 1 or 2 days. And with that being said, taking a look at the price of Solana on the daily time frame, and right now Solana is still finding support in this price range, acting as strong support in between around 140 to 144. And below that area right there, in case we saw candle closes on the daily time frame back below 140, then in that case we have this significant area of support in between around 120 to 128. And as for resistance, we do have some decent resistance in between around 159 to 162 approximately, and we have more resistance in between 170 to 175 and in between 183 to 187. And overall, if we're looking at the trend at the moment on the daily time frame for the price of Solana, technically speaking, we're in a neutral trend, basically a massive sideways price range in between this area of support and this area of resistance, because ultimately we're seeing relatively horizontal highs and relatively horizontal lows. So basically a sideways consolidation, a neutral trend. And obviously this sideways price range right here is made up of short-term bullish moves and short-term bearish moves, so just keep that in mind. But you can actually make a lot of easy profits in choppy sideways price action just like this by watching the video in the bottom left of your screen right now, because that video right there shows you how you can easily profit from choppy sideways price action, and the video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.